Hey everybody, welcome back to the Financial Freedom Show. My name is Rob Berger, and it's Monday morning, August 5th. Yeah, at 10 a.m. Eastern Time. And as you probably know, the stock markets are down today. And as I was flipping through the news, I saw words like bloodbath, rout, global, catastrophe. And I thought, rather than trying to create a video like so many people do, or a news article that wants to sort of play and profit on fear, I thought I'd maybe take a different approach and give you my perspective on what's happening and what, if anything, I'm doing about it. Now, there's some irony that this has happened today. If you watched my Saturday video about Warren Buffett selling half its Apple stake, at the end of that video, I said, we've had really good times since the Great Recession. There have been some blips, COVID, but no recessions to speak of. It was a couple of months of a recession in 2020, but otherwise we haven't had a recession in 15 years. The market's by and large been great and going up. We're in for some rough times, but I emphasize I have no idea when. Could be next year. I don't know when. I'm not even trying to predict. And here we are 2 days later. You're welcome. Okay, so let's first talk about what is happening in the market. So I'll just pull up. This is just the Apple stock app, and I was looking at Apple because I own Apple. It's my largest position. It was down 10% when I first looked today. That's a big number. It's down 5% right now. Now, I think part of that, of course, is that Warren Buffett sold, or Berkshire Hathaway sold, roughly half of its stake in Apple, and so that makes people nervous. Of course, he still has, I think it's 80 billion in Apple stock. It's still the company's largest holding. I will add too, a lot has been made of how much cash they have, 277 billion. That is no doubt a lot of cash. But they're a company worth, well, today I don't know, they've probably gone down in value. They're down 3%. So they're down, their market cap is down to 894 billion. They were at 922 this morning. But he's basically an investor with 70% in companies, stocks that the company owns, plus they own whole companies, right? Like Geico and Dairy Queen and the like. So they're he's basically got a 70-30 portfolio. So while a lot of people like to talk about how much cash he holds, the vast majority of Berkshire is invested in businesses, either in whole or in part through ownership of shares. In any event, if we go and look at the S&P 500, so far today, again, it's early, it's down 2.7%. That's where it stands. The NASDAQ down a little bit more, maybe in part because of Apple, but 3.6%. And that's the NASDAQ. And the Dow is down 2%. Now, the first thing I want to point out, and I'm not, this is normal. This is kind of what happens. This is part of the bargain. It doesn't happen every day, of course. Thank goodness. But if we look at, say, the top 20 worst days of the S&P 500, at least so far today, we're not even close. Let me show you this. This is from Wikipedia, so it's got to be true. I actually do assume the numbers are right, but these are the 20 best and 20 worst days in the S&P 500. The best, of course, are in green. We're focused on the worst. 20% down there. That was, of course, 1987. Some from 1929. Here's a couple from 2020. Of course, COVID. We've got a 2008 shows here. They're down 8%. Here's another 2008 down almost 9%. Here, 1987, another day, down 8%. We get down to the 20th worst day, and it's down, we'll call it right here, 7.5%. 7.5%. So we're not even close. I mean, we're not even in the top 20. I couldn't find a list that went beyond that. I'm sure it's out there somewhere. We're at 2.5%. Would that put us in the top 100? Top 50? I don't know. But the point is, nothing's broken. Nothing's wrong. This is what happens. And here's a second thing to keep in mind. Because stocks trade, when the market's open and even after hours, you can see the price. We can watch it. It changes by the second. It takes on a different feel. But guess what? The value of Dairy Queen has changed today. Now, as a standalone company, you won't find it on a ticker, right? Because it's owned in its entirety by Berkshire, which is part of Berkshire. But that business has gone, my business, such as it is, a little YouTube channel that I have, if I were to try to sell it, one might argue it's worth a little less today, right? People are concerned about a possible recession. We'll talk about that. But the point is that on a day like today, the value of businesses generally declines. It's just that if they're publicly traded, you can go to a page like this, or maybe more likely we'll go to this CNBC report, or we could even just go back to this is a live update. We can see it, right? You don't see the change in value of my tiny little business or of any other private business, but they're all going down. That's what's going to happen on a day like today, or most of them will. And that's quite normal. So that's the first thing I want to stress. What's happening in the market today? The news cycle is going to be all over it. I guess they should be, but it's what's going to happen. And by the way, a lot worse than today is going to happen. I don't know when. It's not a prediction that it's going to happen at a certain time and for a certain reason. It's just the nature of the global economy and the nature of markets. It's just what happens. We can certainly look back in time and see it happen over and over and over again over, we'll just say, the last 100 years. So today is nothing out of the ordinary in terms of stock market history. And in terms of extreme events, it hasn't even registered yet. It's not even in the top 20. It's probably not in the top 50, but I couldn't find that data. The point is, it's all normal. The second thing I want to stress, and really the reason I wanted to do this quick video before I race off to the gym to lift some weights, is that if you watch financial news, whether it's another YouTuber, major media, they are going to want to capitalize on what's happening. And they're going to do that by and large based on fear. And we need to be aware of that when we're reading the headlines, or otherwise it can really get, discouraging. Let me show you an example. I'm actually going to go back to the CNBC article. Dow drops 1,000 points. NASDAQ craters. NASDAQ, it cratered 6%. In global market, it's a rout. Live updates. Of course, if we actually go to it, that was earlier. Now the NASDAQ's only down 3.3%. But that's the kind of headlines that you're going to get. I was looking at YouTube and I signed in. I'm signed out of YouTube because I didn't want, my search history to influence it. And you see all these, turbulence in global markets. Here's a bloodbath, and it's all red. This is red. These are the kind of things that you're going to get. And I think we need to be aware that, this is what media folks do. It doesn't mean, by the way, that what they have to say isn't valuable. Some of them probably are. Many of them probably aren't. But they want that click. They want you to click on their video. I'm not going to do that for this video, so maybe I won't get any views. But it's just not how I feel. 3. I think I'm on number 3. If you are still saving, you haven't retired, you're putting money every paycheck into your 401k or other workplace retirement, you're contributing to an IRA, maybe a taxable account, you should be absolutely thrilled when the market goes down, because that means when you make those purchases, once a month, twice a month, once a quarter, you're getting shares of whatever it is you're investing in at a cheaper price. So you should actually hope that we have more days like this, particularly if you're a long-term investor. Think 5 to 10 years or longer. For those of you that are fairly new to investing in your 20s or 30s, you should be cheering today, and you should hope for many, many, many more just like this, if not even worse. Of course, you probably don't want the economy to collapse. You'd like to keep your jobs, sure. But the cheaper you can get those index funds at, or if you invest in individual stocks, today's a better day to buy Apple than it was yesterday. By the way, that's not a recommendation that you buy shares of Apple. I'm not buying anymore. I'm not selling either. My point is simply this. As stocks go down in price, they become a better buy. Now, a lot of folks, and this is maybe point 4, I do want to be careful, buy the dip. I'm not really a big believer in that concept. I certainly want to buy my investments at the lowest price possible. But there's a big problem with buy the dip, and that is we don't know where the dip is until it's too late. It's only in hindsight that we can look back and say, oh, yeah, the market dipped in, March of 2009. But we didn't know that in March of 2009. We still thought the world was ending. So today, what's today? I have no idea. The stock market could go down a lot more. Today, tomorrow, next week, this year, it's still, based on historical measures, overly valued. At least the S&P 500 certainly is. And so I'm not a big believer in buying the dip because we just don't know when the dip occurs until, after the fact. I am a big believer in just consistently saving, each paycheck as you might go, and investing consistently like that. Some would call it dollar cost averaging. But I'm a big believer in that. I've done it all my life. But you really can't buy the dip because you don't know when the dip has occurred until, it's too late. The next thing I'll say is for folks that are like my age or older, you're retired, you're near retirement, these can really be scary days. But we have to keep a couple things in mind. One is, as I mentioned earlier, this is just part of the deal. This is normal. If you're 65, and let's, for planning purposes, you assume you live 30 years, you're going to see a lot more than this. You're going to see this over and over and over again for the next 30 years. Yearly, certainly every couple of years. Recessions typically come roughly once every decade. We've actually gone longer than that. If you discount the couple of months we had a recession in 2020, it's been 15 plus years. These are just things that are going to happen. The thing that I like to keep in mind as someone who's at the retirement age is that one, I always want a balanced portfolio. So we're about between 70 and 75% stocks and the rest in bonds and fixed income. And so we have a lot in fixed income, and that's very comforting. But the other thing I would point out is for retirees, even if you're spending down your investments, you're not typically not spending 30% of your portfolio each year, at least I hope not. I think for most people I talk to, they're spending a couple of percent, maybe 3, maybe you follow the 4% rule. The point is, the vast majority of what you have invested is going to stay invested. You're not going to spend it this year. You're going to spend a little bit each year, and you probably even have some control over that and could cut back if you want to. My point is, retirees are still long-term investors, and most of what we have is going to stay invested. And so what's happening on a day-to-day basis, a week-to-week, month-to-month, even a year-to-year basis is not all that important. And as an example of that, I'll mention Apple. Let's go back to where it stands. And I want to talk about the recession, and then I'm out, and you can go enjoy your day if you're still watching. If we go back to Apple, where is it now? It was down 5%. It's still down 5%, 5.06%. So again, part of that is because Berkshire sold a big chunk of their Apple stock, as we know. That was disclosed on Saturday. So that's part of it. But here's the big takeaway. None of this will matter a quarter from now. I mean, it'll be sort of historical news that Buffett sold. 2 quarters from now, the price won't be determined by the fact that Berkshire Hathaway sold 50% of its stake. It will be determined on their quarterly results, their annual results. How many iPhones are they selling? Are they still maintaining their profit margin? What does the future look like? Of course, if we go into recession, and I'm going to talk about that in a minute, but if we go into a recession, that could certainly hurt Apple, at least in the short term, right? Not as many people buying those iPhones or Macs or whatever. And so, but that's just a normal part of the economic process. A year from now, 2 years from now, no one's going to remember. Just like, by the way, no one remembers when Berkshire bought it. Do you know when Berkshire bought Apple stock for the first time? I'm guessing unless you Google it, you don't know. When it happened, big news. Wow. Warren Buffett's promoting his stamp of approval on Apple. Big news. Stock goes up. But after a while, people know that Berkshire owned Apple, but it's just no longer priced in. It's just whatever it is. And the same is true today when he sells. So it's one of many reasons I just leave my Apple stock alone and haven't sold any. Don't plan to. All right, recession. Let's talk about it briefly. I mentioned on Saturday, it looks like maybe we're heading to a recession. We still don't, I guess, technically know. What happened today is because of the unemployment numbers, and that is a big indication that we are in a recession, and I'll show you that. Here it is. This is, I think I'm pronouncing this rule, the Somme rule. It's named after, I think her name, Claudia, I think. But this is an indicator, a sort of a real-time indicator that we are in a recession. And so you can see the definition of it here. It has to do with the moving averages of the unemployment rate compared to a previous time. and we went above 0.5 right here. If you can read that, but we're at 0.53. And so this is sort of a real-time indicator that we are in a recession. Now, of course, time will tell, but it's been a pretty predictive indicator of recessions. And that caused the Japanese stock market, among other things, to really go down big time. It was, I think, down 12%. We can look at that same CNBC article. Yeah, it plunged. It didn't go down, it plunged. But that's their word. It declined 12%. And of course, a lot of other world markets went down significantly. U.S. markets have followed suit. So maybe we're in a recession or headed to recession. And there you go. That's kind of what's happened. And that's sort of a normal economic reality that we can't avoid. And it's going to happen again and again and again. And we have to just be used to it. We have to get comfortable with it, at least as much as possible. So at the end of the day, what I see in today's market is nothing out of the out of the ordinary course. It doesn't happen every day, of course, but if you're invested in businesses, and particularly publicly traded stocks through ETFs, mutual funds, or directly, this is just part of the bargain. It doesn't mean something's broken. It may mean we're going into a recession, and there could be, profits could be reduced during a recessionary period for sure. But that's just a normal part of the economic reality that we live in. It's nothing new. It's been happening all of my life and since long before that. So that's my take. If you're a long-term investor, you should love it. Keep investing. Frankly, even if you're in retirement, you're only going to be spending a fraction of what you invest in. And by the way, to the extent that companies continue to buy back their shares, they're getting better values the lower the share price is. So if Apple continues to buy back its own shares, I'd much rather it get more shares for less money, which it's able to do when the values go down. So there you go. That's my take on it. I don't think it's a rout. I don't think it's, red and alarms. It's just sort of the normal reality of the economy and stocks. That's my take anyway. Now I'm going to go lift some weights. Hope you have a great day. I will be doing a live show tonight at 7 p.m. Eastern Time where I answer your questions. I'm going to guess that a lot of them are going to be about today's market, but we'll see. Hopefully you can join me. If you can't join live, it is available afterward to watch. But would love for you to join if you can. Until then, have a great day. Maybe just ignore financial news. And remember, the best thing money can buy is financial freedom.